Good morning, this is Meir Valensky with Driving Markets. I hope you're all well. Anything said in this piece is purely an opinion. If you make money on it, that's great. If you lose money, then don't sue me, which is the normal caveat I gave. Okay, so let's just look overall as what is driving markets yesterday and what's driving markets today. Well, during the day, the markets were again very volatile, dipping into negative territory and then going into positive territory. We're talking mainly about the US, because the European markets follow what the US does. So yesterday the markets did finish up. The Dow finished up, the S&P finished up, and the Nasdaq finished significantly up, all being pulled up by the amazing results of Google that reported on Tuesday night, and that drove the markets yesterday, Wednesday, during the Wednesday session. The unemployment figures came out were slightly lower. The private labour market was slightly lower than expected. That put a bit of a dampener on things, but overall it looks like the investors have taken everything in their stride, including the likelihood of interest rates and inflation. So at this stage of the game, the January dip is behind us, and it looks like investors want to push the market further, which is what they did yesterday and what they've done for the last 4 sessions. However, last night Facebook came out with the most horrendous, disappointing results, and as a result, the overnight Nasdaq is down 2.3%. That's over 325 points, which is a big drop. So you've got the last of the big 5 reporting tonight, which is Amazon. That'd be very interesting. Be aware that the top 5 represent 25% of the S&P. That's how distorted the S&P 500 is. So you've got the top 500 companies in the States, which is measured in the S&P 500, and yet 25% of those 500 companies' profitability and performance is represented by the top 5, which is their firms, the Facebooks, the Apples, the Amazons, the Netflix, and the Googles. That represents over 25% of the S&P. You talk about distorted, that is hugely distorted. So any significant move amongst those top 5, whether up or whether down, will have a major impact on the Nasdaq, and obviously will have a major impact on the S&P. So that's something to be aware of. Remember that markets are whippy and are volatile. It doesn't mean that they're only going up, and doesn't mean they're only going down, but you have to trade according to the ranges, and you have to trade according to how much money you have on account. You've got to be very cautious regarding those particular matters. On Friday, you've got the non-farm payrolls. That's also a massive figure. They're expecting round about 150,000 jobs to be added, which is lower than expected. That's mainly due to the Omicron pandemic, which has affected overall labour market and overall economic activity. So you are going to have ups and downs in the economic cycle due to the pandemic, not just to other profitability numbers regarding the companies that are reporting. So take that into account also. There apparently was a new variant come out, but I don't know anything about it. This is obviously going to be the case every couple of months. There's going to be a new variant. I think and I hope that the world's going to take into its stride that these variants are really insignificant as far as I'm concerned. A bit like Joe Biden, he's also insignificant. It's got no impact. But then the trouble is, there's no variant of Joe Biden. It's the same variant, unable to do anything and incapable and should retire. But that's my political input for the YouTube driving markets. The yield on the 10-year Treasury came down to 1.76%, and the other interesting fact is regarding options traders. The risk premium on options was reduced by about 2% yesterday, which means that option traders are seeing a more bullish market and less risk, less volatility in financial markets. So they've reduced the risk premium. The risk premium is like an insurance policy. The higher the risk, then the more the premium you're going to pay. The lower the risk, the lower the premium. So the option traders have lowered the premium by about 2%, which means that they think there's less risk in the marketplace at the moment of significant falls, just to take that into account. You can subscribe to my YouTube, you can like it if you want. I don't get many likes, so if you can like it, that'd be great. You can contact me on LinkedIn, on WhatsApp, on Instagram, Walensky Meyer. You can also comment on this YouTube. This is Meyer Walensky with Driving Markets, and let's hope you're going to make some driving profits. Have a good day.